everyone, and I'm going to call today's Audit Committee meeting to order. And with that, I'm going to ask Rachel to do a roll call.
Good afternoon. Thank you. Chair Wright,
I'm here.
Regent Porth,
Here.
Regent Santiago. Absence is noted. And Chair Wright, you have a quorum.
Okay, thank you, Rachel. The first order of business is the approval of the previous audit meeting minutes. Can I have a motion?
So moved.
I'll second it. So all in favor?
Aye.
Aye. Okay, with that, I am going to turn things over to management so that we'll begin with the APA audit update. Melinda,
Yeah.
to you?
Yeah.
Okay.
Thank you. Good afternoon to the committee and to our audit teams that joined us today. I'll start with the APA audit update. The Auditors of Public Accounts, or the APA, released the statewide federal single audit on March 27, 2024 for fiscal year 2023. As you may know, this audit looks at the compliance of federal grants statewide and is performed each year. This year, there were 8 overall findings related to the CSU system, and all but one was related to student financial aid grants. One finding was related to COVID-19 grant at Norwalk, was related to a lack of approval support for a transaction using a P card. It was a small purchase, $137 that was charged to the grant. The auditors found that there was not sufficient approval for that and noted it as a finding. The findings related to student financial aid grants were at Housatonic, Southern, and Eastern. There were 2 findings related to cash management, where the college held on to excess federal funds longer than allowed, and where direct loan reconciliations were not being done timely. There were 2 findings related to reporting requirements, enrollment reporting and disbursement record reporting, which were either incomplete or late. And there were 3 findings related to special tests, including verification of corrected FAFSAs, which was missing for 1 student, disbursement notifications that were not sent to 10 students, and return of Title IV funds being incorrect due to using an inaccurate enrollment period in the calculation itself. The administration of federal financial aid grants is a coordinated effort between financial aid and the business office, and efforts are in place to put controls in to avoid these or similar findings in the future. Furthermore, since in the past, each campus was tasked with responding to findings and tracking them as individual entities, with the college merger, we are going to be working on a consolidated tracking mechanism at System Office for these findings that will enable us to monitor these more closely. And I wanted to pause and ask if there was any question or comments related to the federal audit, the federal grant audit, before I move on.
Melinda, I think you answered my question. The first I had was the effect of the consolidation, and if we're introducing a way to audit to ensure that compliance consistently across all the campuses. And number 2, what contributed to some of the findings that where it seems like you said it was limited to 3 campuses, correct?
Mm-hmm. Yeah.
So what was it about in those situations? Was there a similar issue across those campuses? You mentioned something about an app. Just wanted to get a sense of, was it human error? I know at one point there were, in the past, a lot of the monitoring of this was done by individuals and it was done manually. So I'm just trying to get a sense of sort of what we're doing to address those issues.
Yes. And it was one specific college campus that did have the majority of these. I believe Eastern may have had 3 and Southern had 1. The rest were at Housatonic campus. So I believe the majority of it is due to the consolidation with limited resources, with retirements, with people leaving, and then also, like I said, it is a coordinated effort between financial aid office and business office. And so the communication needs to be improved. It starts with financial aid, but it ends with business office. And, the merging of those two to ensure that communication does not get disrupted is really important. And I am going to be meeting with them in, I believe, mid-June to go through these and make sure that, we limit the amount of risk to a repeat finding. But yes, we are going to be working on a mechanism at system office to track and monitor these more closely. And I think Lloyd wanted to chime in.
Yeah, real quick, Madam Chair, human error is a normal thing. So what we have to do is design the right controls with an eye on, basic human error and basic human practices, if you will. So the emphasis here is on determining which controls need to be put in place in a consolidated way that make sure that these mistakes are caught, in advance of an audit. So mistakes are going to happen. We just have to be able to catch them.
Elisa, a quick question. It sounds like the amount of funding involved in these findings was relatively minor. Is that an accurate statement?
So these specific programs are tested because the auditors consider them to be major programs. So it's over a specific dollar threshold of expenditures statewide. Because it hits that limit, they see it as either a high risk or they automatically test it because of the amount of expenditures. So the student financial aid grant is relatively large, and that's why the auditors tested it, and they test it every year as part of their single audit.
So I think the point is, while the dollars for financial aid are large, the particular incidents may not implicate large dollars. Correct.
Yes, these were not, material weaknesses. These were lower in, impact. And some of the dollar amounts are very small, but because it's a control compliance issue, it's considered a finding.
Understood. Thank you.
I don't think there are any other questions, Melinda.
Okay. So I'll move on to another audit that I wanted to discuss. And this is the departmental audit. It's statutorily required by the APA to conduct department audits every few years or so. And this is in accordance with Connecticut General Statute Section 2-90. There was one report issued since our last meeting in December, and this was for Charter Oak for fiscal year 21 and fiscal year 22. Within that report, there were 5 findings in total. 1 was on fixed assets, 3 was on purchasing records, and 1 was on technology and disaster recovery planning. All these findings were focused around timeliness and completeness of records. There were no findings related to unauthorized purchases, theft, or any other related risks. Some of these findings were previously known by management and were due to resource constraints with Charter Oak, still navigating the pandemic and employee turnover. After the audit was released, Charter Oak management has added additional measures to continue to mitigate these, and there will also be a separate technology audit report coming out soon, which carries the same focus. And with the technology team now replenished at Charter Oak after a fair amount of turnover, the team has positioned itself to complete these tasks by calendar year end. And the APA is currently working on the financial statement audits or the financial audits for 21 and 22 fiscal years for the other institutions, but results are not expected for quite some time. And I just wanted to see if pause there if there were any questions on the departmental audit.
I don't have any questions.
I don't either. Thank you.
Okay. So then I'll move on to a more general, year-end update. And as far as an accounting update, we actually have a pretty quiet year as far as accounting standards goes. Since the last few years, we've had a couple of big accounting standard implementations and also changes in the way that the state funds fringe method, the fringe methodology. So we had a lot to take into account for, prior year ends. This year it's a little more quiet, which is great for us. We're still working through some wrinkles, and processes from the CT State merger, but we anticipate this year end and the financial statement audit to be a smooth one.
It's good to hear.
Yes. And today we do have our new audit firm for the CSU 2020 construction audit here. As you may be aware, state statutes require us to rotate audit firms every 5 years, and Cohn-Resnick concluded their 5th year last year. So we put out a bid for proposals a couple months ago, and this is using the statewide DAS contract. Wilsey was selected as the successor, and I met with them a few weeks ago to outline the audit plan and the timeline, which they will go over with you today. And we also have Grant Thornton here to go over their fiscal 24 audit plan as well. And that's all I have for updates, but I'll take any questions that the committee might have.
I'll ask a quick question, Elise, if that's okay.
That's fine.
And you sort of alluded to this earlier. One of the outcomes we hoped for in the consolidation was consistency across all the different institutions in terms of procurement, purchasing, the way we manage our funds. Are we able to identify progress in that area at this point in time?
That might be a question for me.
Yes, thank you, Lloyd.
So yes, we can identify progress. It's a little more complicated in terms of what we were able to consolidate. There was some consolidation that existed even before the CT State consolidation, mainly in the finance areas and purchasing areas. Since when we consolidated CT State, it included IT, HR, and the others. So I'm preparing right now, actually, the materials for the Finance Committee meeting that will show that we've reduced our personnel here at the system office by 31 employees just in the last year. So that's the progress, right? Consolidating these administrative functions and then making them more efficient, okay? We still have to improve the services that we provide. I think in the CT State case, they over-consolidated such that CT State has very little of its own administrative capacity now. So we're having conversations about which administrative functions belong at the system office. One might think those would be the ones that have more scalable functions, and which functions belong at CT State, whether at New Britain or on the campuses. And those we are thinking of more as the high-touch administrative functions. HR, generalists is one example of that. So yes, we are making progress, Regent Porth. It's slow going, but we are making progress.
Thank you. And just sort of for the record, in being able to consolidate in the way you just described, we're still fulfilling our responsibilities with regard to compliance and the way we use taxpayer and tuition money and so forth. Is that an accurate statement?
Yes, it is an accurate statement. It is our highest priority is to take care of and be good stewards of taxpayer dollars.
Yeah, thank you. I had to ask. Thank you.
I appreciate it. Thank you.
I'd like to add too, having been on this board for a little bit of time, in addition to the consolidation, I think there is a standard way of practice that has been introduced that didn't exist before. So even when the community colleges were independent of one another, just part of the system, that there were different ways of doing things, from a financial perspective, from even an auditing perspective, it was all person dependent, which is a recipe for mistakes. So I think the other point is that even if you are directing some services, high-touch services to the individual campuses, that there's a consistency in the way the practices, sort of the rules that didn't exist at least, 5 years ago.
Well, I appreciate the comment. We recognize that as well. And that remains part of our challenge is to, we can draw the boxes and design everything perfectly, but there is a, shall I say, herding of the cats element to this. And so we continue to get people to think about a consistent approach and have them follow that consistent approach. Sometimes that takes a little while to get those practices inculcated throughout the state.
Yeah. I mean, there were some learnings too. There were some campuses where the practice was better or more effective than than other locations. And so if we can learn from the good experience of some of the locations, that's helpful for all of us.
I think long ago, I think our campuses were used to competing with one another. Now we're trying to get them to cooperate with one another. So that's part of the challenge we face, but one that I think is important and one that we'll continue to work on. Thank you.
Thank you. So are we ready for our new audit team's presentation, Whitley? And maybe it might be helpful to introduce the new members.
That'd be helpful.
Yeah.
Yes. So Sean, I don't know if you have anybody with your team with you, but if you can introduce yourself and anybody else, that would be great. Thank you.
On the call, can you guys hear me all right?
Yes.
Yes.
Yeah, on the call right now, it's just Nick and I. We have a basic agenda that Nick's going to share. It's probably stuff you've seen a million times before, so it's informal. If you guys have any questions, feel free to just stop us at any time and kind of ask throughout. But thanks, Nick. So here's the basic agenda. I'll go through the engagement team. It'll have all our contact information on this. So if you ever need to contact us, you'll know. We'll go through the responsibilities of all the parties involved, and then we'll go through our basic audit approach. Here's our engagement team. Outside myself and Nick, Lisa Wills will be the concurring audit partner doing the second review on the schedule once it's completed. So I just wanted to have her contact information on there as well. Next, we're going to talk about the responsibilities. First off, the responsibilities of management. Again, pretty standard. They're overall responsible for the presentation of the schedule, maintaining internal controls, posting any adjustments that we may have as part of the audit. And also at the end of the audit, we'll be issuing just like a normal audit, a management representation letter where they confirm everything went copacetic. Next, we have the governing body responsibilities. And the only thing majorly different on this is your ultimate responsibility is oversight of the whole process, including the schedule and internal controls. We also are pretty open, and we'd like to know if any questions of fraud, internal control issues, compliance with laws and regulations. We're open to receiving that information as well. And then the last is our responsibilities, and our main responsibility is to issue an opinion based on the schedule. And this schedule is prepared on a cash basis, which is probably a little bit different from your other audits. And now, Nick, I guess you can go through the main audit approach.
Yeah, thanks, Sean. So just to talk on planning and risk assessment. So as part of the planning, we conduct meetings with both management, which we've already spoken to, and yourselves as the governing body. And we develop an audit timeline, which we'll go over in a little bit. We identify and assess the risks of material in the statement. We identify any significant transaction classes and perform walkthroughs over those. And we design our audit procedures based on the results of the other planning and on a test basis, look at all the transactions in the classes and everything regarding the amounts and disclosures in the schedule. Just to go over significant risks and key audit areas. So the two significant risks are management override of controls and improper recognition of and reporting of project costs and budgets. And the key audit areas are direct costs and expenditures, labor costs, and approved allocation methodologies and budgets. some of the fraud risk considerations. So part of the identification of fraud risks we go through is we perform our own risk assessment procedures to identify any risks. We discuss those internally with our audit team. We make inquiries of senior management and governing bodies, and we evaluate programs and controls in place that prevent, deter, and detect fraud. And some of the responses to those fraud risks are evaluating, designing, and implementing the implementation of controls, testing the effectiveness of controls. We perform our substantive audit procedures over our audit areas. We address revenue recognition and the risks of management override of controls. We evaluate all of our audit evidence, and then we communicate all results and findings to both management and governing bodies. And lastly, just our proposed timeline. So we have this planning meeting in May. Starting in July, right after year end, we will do our internal control testing, our risk assessment. We'll conduct all of our field work and detailed testing. We will prepare draft financial statements and review them internally, and then share those with management for their review. And then in August, we'll come together and do a conclusion with the audit committee, and we'll release the final audit report once it's all approved.
That's kind of a 10,000 foot view. I don't know if anyone had any questions or about the timeline or about our firm or anything.
Yeah, I just have a comment that has nothing to do with your organization. I have to say, you used a word that was a favorite word of my father's, copacetic. So you must be an old soul.
Yeah, I guess so.
So Richard, do you have any questions?
No, this was a good presentation. Your firm has a great reputation. We went through a formal process, and I'm happy with where we are right now, and I look forward to seeing the audit when it's prepared.
Well, thank you, Sean and Nick. And who's next on the agenda? Oh, I should have known that. Claire.
Hello, good
Welcome back.
afternoon. Thank you.
Rachel,
Sure,
have a
I just
question?
wanted to, no, interject. Claire, if you like, I can share your slides.
That
When
would
you're
be
ready.
helpful, Rachel.
Okay.
Yeah, you can go ahead and share them now. That would be great. Thank you. I have Chris Bradford and Dave Stoffel with me here today, both managers on the audit, both of whom are recurring. So there's some background noise. It's not me.
Sean?
Both of whom are recurring for several years, so familiar with the timetable, with the various organizations that are in the scope, and they'll help me walk through our audit plan. It's somewhat, the general framework of our communication today is somewhat similar to what the other firm just walked through for their audit. It's just basically affirming the timing, the areas of focus, and the deliverables with you. We're looking for your input or any questions that you have on our audit plan. I will steal the thunder from Dave and Chris a little bit to say that there's really not too many changes this year, and actually just kind of reiterate what Melinda said at the beginning, and hopefully, knock on wood, that wasn't a jinx, but the audit, there's nothing new and different this year. Should go fairly smoothly. No new adoption of new accounting pronouncements or new disclosures or anything like that. So I will hand it over to Chris and Dave to go through some of the details.
Thanks, Claire. So if we can jump to the next slide, or sorry, the slide after this one. This is just going to kind of give a summary of the timeline and scope of our audit. So largely pretty consistent with last year. We're currently in the early stages of our planning procedures. So over the next few weeks, we'll work through completing our planning, risk assessment, and interim testing. And then in September, we'll pick back up with our year-end field work and work through that from September through December with a target issuance date in December. So I guess I'll pause there if there's any questions on the timeline.
Chris, I don't have any questions.
Okay. So I think we can jump ahead to the next slide. And this, we'll just cover this very quickly. So consistent with last year's, the significant risk we've identified is the management override of controls. And this is a presumed fraud risk in all audits. I think we can move to the next slide. The other areas of focus, and I think the vast majority of these are going to be very consistent with last year, including the ones on this slide. So we don't have to go through all these in depth. But I think we can move to the next slide. And Dave, I can turn it over to you.
May I ask a quick question? The state implemented the Office of Policy and Management, a new way of paying for benefits, which really impacted the CSCU system significantly. And we have, here again, I look to Lloyd for help on expressing this, but we worked hard to make the argument that this change in the way benefits are paid for had a significant impact on our bottom line. Can anyone comment as to how the audit will look at that change in the way benefits are paid for, partly with the goal, obviously, of documenting compliance and appropriate use of funds, but also to help demonstrate how it's affected our bottom line?
So let me start there, Rich, if you don't mind.
Sure.
So this change began in FY24, the current fiscal year that we're still, a couple of months left, about a month and a half left. It's mostly a budgetary issue. By the time the accountants come together and look backward on FY24, they're going to essentially see large changes in the fringe costs, but I'm not sure they'll be able to explain it other than being a policy change that increased the burden on us paying for fringe costs. I don't know if there's going to be a compliance issue so much with this, but I'll defer to Melinda if she can think of one that is relevant.
Right. So we did take this into consideration during last year's audit because although it was effective for July 1st, the state essentially runs on a cash basis. And so our accrued payroll, which is paid out in July, had to take this into consideration. So when you look at the financial statements for fiscal year 24, you really will not notice this stick out. And that's because the state is essentially making those payments on our behalf. And because it's considered an on-behalf payment, we actually still need to record a state appropriation to match the expense that they're making on our behalf. So it won't look much different than it looked last year, but Claire can fill in anything I may have missed.
Actually, Melinda, you took the words out of my mouth. It's referred to as an on-behalf payment, and so you gross up your state appropriation revenue for the payments that the state is making on behalf of the system, and then you record the benefit expense. So on the audit side of things, again, Melinda articulated it exactly as I would, that we'll still continue to test the expenses, and there'll be a related offsetting state appropriation, which will include in the scope of our audit for state appropriations.
Thank you.
Thank you for the question. Dave, go ahead, continue.
Thank you, Claire. Can everybody hear me okay?
Yes.
Okay, I wasn't sure if I was the source of background noise earlier. So this slide just covers some of our lower risk areas of audit focus. Again, as Chris mentioned, they're all standard and consistent with last year as far as confirming cash and state appropriations, testing of capital assets, and grant revenues. If you want to click to the next slide, this is a new slide for us, but things that have been done in the background each year in terms of testing accounting estimates. We focus on any areas that might require management to make estimates, whether it be receivables or even the actuarial estimates used for the benefit plans, as well as financial statement disclosures, which we every year as part of our concluding procedures, we perform a disclosure checklist to make sure that all the disclosures are complete and accurate within the financial statements. If we click to the next slide. This just talks about use of other auditors, consistent with last year. Each of the foundations have a separate auditor, which we send letters to receive the permission to make reference in our audit, that those audits are performed by unaffiliated auditors. And then the net pension and OPEB liabilities, as we discussed, the state of Connecticut performs the audit of the valuation prepared by the independent actuaries, which is one of our estimates, and that GT utilizes our actuaries to review their work. If we go to the next slide. This just talks about our independence, which is consistent with prior years. We have a robust independence quality control system. We send independence checks to make sure that we don't have anything that would impair our independence or appear to impair, and we can confirm that we are independent of the system. And if we click to the next slide, this is just a commitment to promote ethical and professional excellence. We have a hotline if there was ever any issue. People are able to call with any ethical concerns, as well as a URL. And with that, I'll turn it back over to Claire for some industry updates.
Thanks, Dave. So just to sort of mark a shift, that was the required communications that we have for the planning aspect of the FY24 audit. If there are no other questions, we did also include several slides on just general industry trends. I'm not going to go through them slide by slide. It's a lot of material. It's more for informational. But I will just say at a high level, this is what I refer to as, some people call it spring. I call it audit committee season, where I've been traveling from one audit committee meeting to another, doing exactly the same thing, where I'm having conversations with audit committees about the audit plan, but also hearing from my clients about what's going on, what are the opportunities and challenges that universities, both public and private, are facing. And generally, it's unfortunately right now, it's a little bit more challenges than opportunities. There's a lot of consolidation in the industry, both on the public and the private side, probably more so on the private side than what we've seen in the recent past, with all of the kind of pulling back of the federal money during COVID to help bolster the balance sheets and the NP&Ls of these struggling higher education organizations. Now that that money is gone, it is getting back to what is the basic operating model of these colleges and universities. And for some of them, it's broken, unfortunately. And it's driven by both the increased costs that we've experienced, over years and decades, and particularly in the high inflation market that we've seen most recently, but also coupled with, in certain geographical areas, a pullback in enrollment as well. So it's kind of the perfect storm at this point for many colleges and universities facing cost crunch and revenue crunch. I don't know if the members of the committee or management have any questions on specific material that was in these industry updates that you wanted to have me elaborate on further, but did want to just acknowledge it, but didn't plan to go into detail unless you have questions.
No, Claire, I think I've said this to you before, you and your team. I always find the information that you send, the informational information, very helpful, because it gives us a sense that we're not out there alone, that we're facing some of the same challenges as other higher education institutions. So I appreciate the source of information, the sources. I thought it was interesting, sort of the Moody, Fitch, and Forbes, the different perspectives in terms of how they assess the situation, which I think is just reflective of, a lot of this is very new for all of us. And it's a guessing game in terms of, sort of how all this is going to play out.
Yeah, and Lisa, I also appreciate this presentation every year. I look forward to it, actually. It, just like you say, Lisa, it helps us provide a real context for the kinds of challenges we face here in Connecticut and the kinds of decisions we need to make with the leadership in CSCU. I really, and I think the board is working very hard to look at information like this and to use it in a way to do generative thinking on how to help leadership address these challenges that face colleges and universities all across the country. So your information provided in these slides and in this report, in my opinion, is really important for us on the Board of Regents as we try to think about how we can support the mission of this CSCU system. So thank you.
Thank you. I'm glad you appreciate it.
Hey,
So that concludes our remarks.
okay. Melinda, any other items you want to raise?
I
Rich?
don't have anything else.
Okay. Well, I thank you all. And again, welcome to our new audit firm. Appreciate that you're with us now. And Claire, as usual, you and your team, it's great seeing you. And I hope that as we move forward, we continue to hear good news and find, just keep on building on the successes that we've had. Because I think each year it gets a little bit better. So I thank you for that. I thank management for that. So with that, can I have a motion to adjourn?
So moved.
I second it. All in favor?
Aye.
Aye. All right. Thank you all.
Thanks, everyone. Good
Have a
meeting.
good day.
Appreciate it.
Bye-bye.
Live stream stopped. Thank you all. Rachel, I will send you, I recorded the